Joining me on the podcast and on video, Russ Mould, Investment Director at Stockbroker AJ Bell. You're right, Russ.
Yeah, I'm very well, Justin. How are you? Summer seems to kind of flown by. We've passed like ships in the night slightly.
Yeah, we have. It's like, yeah, you've been off. I've been off. Been renovating or helped renovating the house. So it's
Yeah, you've been
I've had
renovating, and I've
yeah.
had a bit. I've had a couple of holidays. So
Yeah, exactly. I didn't want to do a podcast when I got literally, there's angle grinder stuff like that going. It's just awful sound in the background. It's been
I don't want
constant
that.
in the house. So it's nice. I've moved into my office. It's a bit echoey because there's not much stuff in here at the moment. Just me, the dog, and pretty much that's it.
I
But
use the dog as an echo dampener, sound
yeah,
dampener. I'm
yeah,
sure if
just
it's
put him up.
furry enough.
Put him over my head. Oh,
Yeah.
perfect. And anything, since we've been away, is there anything, I mean, at the moment, it's all talk about central banks and will the Fed go next time? And you're saying maybe the Bank of England are going to go twice in a row. Now they're saying maybe they're not go twice in a row.
Yeah, I
Russia's
know.
like falling asleep almost. Yeah. And yeah. So what's your thoughts on this,
It
Russ?
is
I mean,
it is important, and we can't pretend that it isn't. I mean, but I think what's interesting, I guess, what everybody's trying to work out is to what degree that wobble that we had in early August was just that, a summer squall, or whether it was the start of something more fundamental and a wider change in sentiment. And one of the most intriguing guides I find is the Philadelphia Semiconductor Index, or the SOX. It's got 30
mm,
members. Um, First of all, semiconductor silicon chips, they're ubiquitous. It's a $600 billion annual industry. And silicon
yeah.
chips are in everything from, this laptop that I'm staring at right now, to my smartphones, my smart meters at home, to my fridge, my telly, my car. So that in that respect, they're a pretty good guide to global economic activity. And the consensus forecast is for 12% revenue growth this year, 12% next year, all well and good if those forecasts are correct. But it's a very boom and bust industry. We had a down year in 2023 because of sort of a post-COVID inventory bulge. So keep an eye on that in terms of the fundamentals and whether the wise owls of Gartner, the WSTS or the SIA start to upgrade or downgrade their revenue growth forecast, because that'll be pretty important.
Yeah,
And the
look at
second
that.
one is
It's been up 400% since 2018. It's quite volatile, like you say.
it is because the industry
400%
is
for an
very
index. Yeah.
volatile, and
Yeah.
so in terms of the industry, it's volatile, but also, as you've correctly divined, it's a great guide to stock market risk appetite.
Mm.
Because semiconductor stocks, they're momentum stocks extraordinaire. They love earnings upgrades. They recoil from earnings downgrades, and they're great for momentum jockeys. And I don't mean that pejoratively, because it's been, as you've just said, a fantastically successful strategy for the past 4 or 5 years. But the index has gone up like a rocket. It's had a summer stumble. It was down by
Yeah.
a quarter from its high at one stage. And what any technical analyst will be looking for is whether you get to recapture that high or not, or whether you start to get a sequence of lower highs and lower lows.
Yeah.
And if you look at the index of the history of the SOX index, it peaked before the S&P 500 by about 6 months in 2000 and did the same again in 2007. So the SOX index began to smell economic and market trouble pretty much before most things did. So this is why, to me, it's really interesting. And just as one indicator, Nvidia is a really big part of it, and that's obviously reporting numbers on Wednesday night. So keep an
Mm.
eye on the SOX. If it pulls up its SOX and gets going again, then I think you'd be pretty comfortable and feeling bull market back on. If it starts to sag, it may be a change in leadership. The Dow Jones Industrials has just set a new all-time high. The S&P 500 nearly, the Nasdaq hasn't. The SOX hasn't. Or it may be telling us maybe something's a little bit more malicious coming around the corner. So keep an eye on it, because it could be a really useful indicator, both fundamentally for those who prefer fundamentals, technically for those who like a bit of more about them, and chart patterns. I don't know, you're much more of a specialist in than I am.
Yeah. Well, I mean, look at that sell-off that is quite brutal, that quite
Mm.
aggressive from well, it topped out the
About
10th of July.
25% in about 8 days, I think.
Yeah. And literally it broke through 50-day moving average, 200-day moving average, down 27% pretty much. It's bounced, but if you notice now, it's sort of failed. Will it gap lower here below the 50-day? It's failed at that 50-day. And you think, is this a start? Like I said, we've seen the last, this was most brutal sell-off, like you say, was back 22, 23. It did 47% drop. And so, but it's
And
still, if you look at that,
that was the US quasi recession slash growth scare. So again, it shows you how
yeah.
sensitive it is to anything along those lines.
Yeah, but even this sell-off is a lot more aggressive initially than that sell-off. And you're thinking, will that make it above the 50-day moving average? Because it did it back in 2023 a little bit, but you're still seeing a series of lower highs. And I'm thinking, yeah, it'd be interesting to see. It needs to sort of get above that 50-day and above that previous high there of what
So
5299 or
strong
5300.
set numbers from Nvidia on Wednesday would help. I mean, Jensen
Yeah,
Huang, the CEO, more or less forecast flat sequential quarterly earnings. Now, one
yeah,
can only assume, I'd imagine most people are assuming he's sandbagging things there. I mean, I know that there have been technical issues with the Blackwell chipset, so we'll keep an eye on that. But Nvidia is a big chunk of that index. Another big chunk of the index is Taiwan Semiconductor Manufacturing
yeah.
Company, TSMC, or 2330.TW for its ticker. And
Mm.
that's a big outsource partner of Nvidia. So again, if those two start to run out of puff, you might worry, and that might take a bit of the gloss off the AI story. Equally, let's face it, Nvidia has demolished earnings estimates for the last 6 or 7 quarters in a row, albeit the bar, the bar is getting higher. Mr. Huang, I think, has done his best to rein that bar in to make sure that expectations don't get too overheated. But we'll see what he has to say.
Yeah, well, Nvidia's stock, like you say, it's not dissimilar. It's
It's
bounced
not
better.
dissimilar at
Yeah,
all.
yeah, yeah, to that. But it's bounced better than the SOX index. But the thing is, that's a, do you find it really odd how fast we went from America being a growth economy, doing well, the strongest economy in the world, to now teaching on recession? Is it how fast has that changed?
Extreme. I mean, I think markets are still net pricing in a cooling in inflation, a soft landing, and interest rate cuts. The data, everybody can use data selectively to their heart's content, but the fact that the Bureau for Labour Statistics revised down the last 12 months job creation figures by a quarter and nobody barely blinked, I thought was quite interesting. So you
Mm,
not only got central bankers relying on lagging data, you've got them relying on lagging unreliable data, which I think has probably stoked interest in interest rate cuts. The manufacturing PMIs come in below 50 pretty much consistently for the last 18 months. The new orders index the same. The housing market doesn't look great. Credit card and auto loan delinquencies are rising. So you can pull out your numbers that really do give you some serious pause for thought on the US economy. Equally, weekly jobless claims are hanging in there. Retail sales are hanging in there. So again, you pays your money, and tax revenues from individuals are actually still quite strong, which suggests that things are going quite well. Though that maybe is related to stock markets going well as anything else. So that could be a little bit circuitous. I'm not sure the picture's quite as rosy as it seems. Um, but I could have said that a year ago, and the stock market hasn't cared. So we'll see. But it is intriguing that markets are baying for rate cuts at a time when, on the face of it, everybody's telling me that the economy is pretty hunky dory, which doesn't entirely add up. But
yeah.
we shall see. I'd also be just slightly wary. Be careful what we wish for here. The Federal Reserve started cutting interest rates in 2000, and we ended up with a bear market and earnings collapsing, and the same in 2007. So my guess is, if you're holding a gun to my head, is just on as they were slow to get inflation on the way up, and then responded with initially very slow movement, then very rapid rate increases. My guess is that they will be possibly a bit slow on the way down and respond with initially slow rate cuts and then very rapid rate cuts. And it's interesting that markets are only predicting about a 200 basis point cut in rates from top to bottom. That's historically a pretty mild cycle. So it fits
Mm.
in with the cooler inflation, soft landing narrative. But if you look at previous Fed rate cycles, 2 percentage points of cuts is pretty small potatoes. So again, if you're looking for where the market could be wrong,
Mm.
then what's not priced in, it certainly isn't a hard landing, and it certainly is slashing interest rate cuts, which might be of interest, for example, to bond investors, particularly those who are long duration, providing, of course, you don't get stagflation and the inflation genie pops out the bottle at the same time, which would be the worst of all worlds for everybody. And keep an eye on oil prices there in particular, because they're bobbling back above $80 again.
Yeah, yeah. Well, do you know what? I do think that, people are expecting, interest rates reductions by the Fed, and the markets, well, it's off the races, but they've been off the races. They've done that. It's like, where
Yeah,
else they got to
I
go?
think the Powell
Since
statement was a bit of a
23,
big
look at that.
nothing for that reason. Yeah, I mean
Yeah, it's just,
the only debate is not do they cut, but by how deeply and for how
yeah.
long. And I think that's going to where the action in terms of the market expectations are now.
Yeah, I mean, S&P since 2023, it's been up 40, well,
It's gone
50%.
nuts.
It's
Yeah.
like, you can't, I mean, at what point do valuations get stretched? It's all priced in, all the potential is priced in. You
So I
need
think
almost,
you're right. Your danger, therefore, is if the core scenario is cooler inflation, soft landing, rate cuts.
mm,
Where are your potential deviation points? Is what investors need to ask themselves. Is it inflation stays sticky? Is it we get a hard landing, or is it the rate cuts don't come? And at the moment, the rate cuts seem to be, so it's as you said, there's a lot priced in. You have to ask yourself what could unseat that, or how much isn't priced in if that core scenario develops. And my guess is that looking at the US data, the economic scenario might not be as strong as we think. But don't forget, we've got an election coming up in November. Whoever wins, they've got some, pump priming plans, and that could change things very quickly. If anything, the promises we've heard from Vice President Harris and would-be President Trump feel inflationary to me. Either tax cuts, tax credits, stimulate the housing market, tariffs, all feels inherently inflationary. Deficit adding, David Einhorn of Greenlight Capital said the same. So again, that could be the game changer. It's more inflation than we expect. But and as we know, second guessing what politicians are going to do, well, they'll say one thing. Whether they can then do anything and get it through Congress is another matter entirely. But their initial promises to me feel more inflationary than otherwise, for example. But again, we'd have to see what happens on the 4th of November and how quickly the result is accepted and what they can then achieve with the help or hindrance of the House of Representatives and the Senate.
Yeah. And finally, that's the price of gold there. It's obviously performing very well.
It is, and I think that kind of leads to the inflation narrative, I think, more than anything else, and that central banks are probably more willing to play fast and loose with inflation than they are with unemployment.
Yeah, sorry, my wife said just walking past the front door talking to me. Yeah, no, exactly.
Sounds like lunch to me.
Yeah, I mean, nice it was. But do you know what? It's one of the things that look at that. It's quite obvious. You see the chart there. It's been the gold. I should take a gold ETF or something, but it did obviously break that level. It hasn't broken for years, and then it broke above that 2100, and
once it broke 2050, yeah,
exactly.
And then it does. I mean, intriguingly, what isn't moving yet are gold mining shares, particularly in the junior. We know the juniors are very risky, but gold mining shares generally aren't moving that much. There has been some gold mining M&A, which is quite interesting. So the miners think there's some value out there. There's been a big deal struck in Canada by an Aussie producer, which was interesting, at a valuation that made all of the UK miners look relatively cheap, although that was a deal in Canada. The UK elites tend to operate in Africa, so there's more geopolitical resource nationalism risk, the execution risk, or geological risk there, perhaps even. But it did make Endeavour, Resolute, Centamin all look intriguing by comparison to the multiple that was paid in that Aussie-Canadian deal that was struck last month.
Yeah. But it seems when gold goes on a run, it does go for quite a long time. It runs for a while, doesn't it? It stays in a range for a while, and then it starts to run for a while.
I certainly did so in the 1970s. So if you did get an inflationary outbreak, then that would be very interesting indeed.
Yeah. Marvelous stuff. Russ, thanks for that. We'll speak to you next week.
Good to see you again. Look forward to it.